Good morning, everybody. Hope you had a great weekend. Charts, camera, action. So, happy days. Thursday, Friday, market wakes up in a bad mood. Must have been a rough weekend. So, market bottom, sucker rally. Not so sure. That was a powerful move off of the low, no doubt. Kind of crazy after it's kind of back and forth price action. Nonetheless, looking at the spiders, they took out these two swing highs, and that signals that it should go higher, even though it's gapping lower this morning. Actually, it's been going down this morning. So it's at around 44, 44350 line here. So if it opens there, right, and of course, it depends on whether it closes there or lower. If it cannot get above that open, obviously short-term bearish, and it leaves potentially a little, I guess, micro island, bearish island reversal, meaning the gap up and then a gap down. But if it gaps down, goes down a little bit and rallies back up to green, then we've got a correction bar that says it, think long above the high, which would be tomorrow. Right now, we've got kind of a battle day of let's see who's going to win this battle. Obviously, things going up the way they did with a large gap. Thursday, the continuation wide range bar stopped at the 50 and then another kind of a large gap. And then obviously it took a little break and the range contracted. And it's got resistance up around this area here. Scroll that up and you can see the little congestion over there, but it's really not all that significant. I guess it gets to the pivots, but let's see what happens today before we start thinking there. And could be a seesaw type of a day as everybody figures out is the gap down anything of significance or a buying opportunity. Looks like a simple pullback consolidation after a big move. Yeah, of course, McGraw. That's all we can really take away from it until proven otherwise. Since it was a powerful move up, and the weekly has got an attempt to go down, an attempt to go down, a red bar that didn't follow through, and then a reversal, and now that relatively large green bar in comparison to it, which suggests it should go up and test the high. Now, does it make new all-time highs? Does it become an M top? Does it go to 500? I don't know. My crystal ball gets a little cloudy. But right now, we've got a relatively significant bottom in. And as long as it doesn't go all the way back down here, and of course, the further it goes back down there, the greater the probability that this was some kind of a sucker rally. I would suggest that this gap should not get even filled anytime this year. We'll see. So with that being said, as we go to SPX, and the option pricing is still skewed, looking for the markets to have a significant move lower. 4370, 4365 should be a no-brainer. With SPX, I look at all of them as being a no-brainer or it's no trade. So you've got this unfilled gap down here. And as I look at this move up that occurred and the bottoming action and so on, it should be relatively, let's say, an impossibility for it to go down here today. As close to anything is impossible, which it's not in the markets, but relatively speaking, this 4480 up above. Well, I think it would be a big move today. But I'd like to respect the power of this move up that occurred last week and go for the no-brainer down here. versus thinking it might go up here and stop because of that open interest at 4,400, which granted, 44, what is it? 4480. Oh, you're saying 4,400 down here and go for 4,480. Well, yeah, of course, there's going to be a larger premium, 4380, 4380. Yeah, you confused me there for a minute. I would say that's doable. I would say it's doable. Yeah. Because look, one of the things that we look at, and we can eyeball this, we don't need any indicators. You know, I hate indicators. Our brain will far outdo any indicator. So if we just eyeball this and think about average true range, or average range day to day, I don't even have to average it. And I look at the biggest bars and I'm like, oh, there's a big one. Right? And whatever the size of that bar is from high to low. And I think about, okay, even gapping down here and coming down here, from the top of the bar to down there is gigantic, to get down to 4480. And I would say, I guess it really doesn't matter what could drive it down there, but there's no news this morning, something terrible, but something could happen in the middle of the day. So to go down to 4380, that extra premium, it's a personal choice. Down a little lower, say is a complete no-brainer. 4380 should be doable. It's a reasonable bet. So personal choice. I think I'd still say the possibility of going down there is extremely small unless some news hits the market that was unexpected. Okay. Let's look at where the cues are. Obviously, they've been relatively weak. Let's move this up here now. They stopped at the 50. There's really nothing there to the left, kind of an unfilled gap, but widely followed moving average. Let's drag this. Let's just go 2 bars back under that bar's low. And this is another unfilled gap that should not get filled in the near future. Right? It came down. It certainly looked like it was going to go down. This was part of the overview in the letters this weekend, is that we were looking for this to go lower based on this sharp move lower that broke through all of these pivot lows, which gave us a down bias, and it made the higher low, and whatever interest rates came down and just springs back up. So what should happen is, and it's good that the market's opening down rather than shooting up and creating a larger void. 44.95 calls on SPX. See how far down things go today. If you want to wait for a turn on the daily chart to see what happens today, but yes, look, if based on what I'm saying, right, is that this market should go up back to the highs. Talking about SPX, right? Qs and tech is underperforming. If interest rates keep coming down, they probably start to outperform. So do you do it today? I think waiting to see how today evolves, because you may get cheaper calls. And we'll see if today makes a turn, whether it's a gap reversal or whether it's a red bar. And then whether we get the consolidation over a few days that builds a new area support within this void. And because this is a void, forget any of this. All we got now to deal with is this. There is an unfilled gap. And so we'll see where it can create support somewhere in this area. I'm saying TNN is spiking now. All right, back up. One of the things that I mentioned in the weekend letter, so that is in alignment with the markets going down. And obviously this uptrend is not over. And when they did pull back the longer term rates, the 5-year, look at this. This thing's continuing to go up, and it's going up at a higher rate than these longer term yields, which means the difference between the two is narrowing. Now, it's very far from getting near a point of where they meet, or certainly not inversion, but it's the type of action between yields and the yield curve that does make market participants nervous. So interest rates going up is a plus. I just think, okay, the demand for money is increasing, so interest rates are going up, and of course, why the Fed is going to control inflation and so on. But when the difference between the yields begins to narrow, well, that's not so good for financials, which been whippy as hell the last few months. But this contraction, as if it contracts more, it eventually, over time, if the two meet, it leads to a signal of a recession. Now, it's nowhere near that, but this is certainly something that you want to keep an eye on, especially since this is now increasing at a higher rate than the longer term ones. And we don't, again, no indicators needed. Just look at the distance between the highs and this move up and where the current day is relative to that pivot, and look at the 5-year. It's rocketing. Oh. And this is just getting started, just based on the visual aid of moving averages being close together. The move up, the long consolidation over months, the moving averages tighten up, and just like here, right? The move started with the moving averages close together. The move started with the moving averages close together. So while this is a little short-term extended, it's just getting started. Okay, let's keep going here. But thanks for pointing that out, McGraw. It's a good point that everyone should be aware of what's going on in this bond market. Qs mentioned up against the 50 there. And so down here at around 467 and change. Is it below? It's not below yesterday's low. This is Friday's low there. So it's not below that, but gapping down, we'll see how far it gets. Again, this type of price action today, not only is it somewhat expected, it's good. And it's a positive that it doesn't go too far too fast, and sets up a new opportunity for prices to go higher once we get a pattern. Futures, no big deal. As you can see, a bit of a topping pattern, which is something we, as intraday traders, we want to, take note of, because since there's such a void here, there's an intraday shorting opportunity. See, the 5-minute is down here at these pivots. All of this stuff down here. So for hourly chart, head and shoulders type of a top, breaks down here, comes down to wherever, creates new support, back up again. Maybe that minor support there at 14,997, which isn't very far away. You can see it on the hourly chart. So I would think that isn't going to hold, and this is a great concept from MTS. Why minor support is subjective. It's beyond directly what's to the left, which is this. What's directly to the left? Nothing. What does this mean as far as what's here? Nothing. Will somebody use that as a reference point? Yes, because they've been told this is what is support, what was resistance becomes support. But as we get deeper into this and look at this as an intraday trader and from a more advanced point of view, and look at, was there reaction to this on the way up? And it's like, hell no. It went through it like it wasn't there. So that was strength, but it created the void. So where it stops, we're going to find out. Maybe this one, since there was a little congestion area right there. Well, that's where I would look to see if it stalls there and begins to create some bottoming action. on the 5-minute chart. Russell, will it ever get out of its trading range? Well, maybe. I think that was a decent start, but it's still just chopping back and forth here. You can see the weekly time frame has just been the whole year in a trading range. We'll see which way this thing goes. Every time it looks like it's going to break out, it obviously it fails, and when it looks like it's going to break down, that fails. So it's in the middle of the range, well, a little bit closer to the top. We'll see, but it's getting tighter. Look at the moving averages here. So again, moving averages are a great visual aid, and maybe it's better to look at this with the ETF. So where the range started, look, the moving averages were pointing up, and they were wide apart, getting tighter here, but the 200s down here, and they're getting tighter and tighter and tighter. So what does that mean? Well, we can take the moving averages off and look at the price action. As I said, they're visual aid. But the highs and the pivot highs and the pivot lows are getting closer and closer together, which means the moving averages have to get closer together because they're based on price. And so as this gets tighter and tighter, the significance of that is whichever way this breaks to the highs or down below the lows, this is getting close to a point where that's more likely to happen. I can't say it will happen because it could just keep going sideways and be an entangled mess of bars. But the takeaway from this visual aid and this price action is that it's getting closer to an inflection point where it should break one way or the other. And others that look at the indicator-based methodology and continue to connect dots, as they did as a child. I love that point in that book. I think it was called Winner Take All. It was one of the things that kind of woke me up 25 plus years ago. Guy was writing about commodities, and he's like, technical analysts, they're like children. He says they're still connecting dots, like in the book that their mother gave them when they were 5 years old to make pictures. And I'm like, maybe this guy's got something there, but I didn't want to accept the fact that technical analysis was a waste of time. So one of the ideas that those that connect dots say as the price action meets the apex of the lines coming together, right, down, up, the breakout is going to be more reliable. Well, it's not about the lines. It's about recognizing that the battle between supply and demand is getting tighter and tighter between buyers and sellers, and that someone is getting ready to blink, and things should take a direction. We'll see which way they go. Oh, the Dow, what a freaking mess of bars overlapping each other and tails and range expansions and back and forth, but it took out the pivot highs. It's got to be respected. Down here this morning, like everything else, it should make new all-time highs. If it doesn't, something's very wrong. And, this whole move was a sucker rally. Transports. Now, this is the real bullish development that supports that this market should go up, and it's not a sucker rally, because this consolidation that's also been going on for quite a long time, it broke the lows and it created support and it took out all of these highs. Now, unless this thing just collapses right back down, which obviously shouldn't happen, that is a big positive for these transports to get out of this range. Yeah. Someone's asking me, they do not understand price action concept. I wouldn't say that people don't understand it, because we're all looking at prices. They've just been hoodwinked in a sense and led down the rabbit hole to the indicator-based methodology. I didn't avoid any of that. I didn't open up some charting program, back in 88 or whatever, and not avoid the trend lines and the fib lines and the oscillators. No, because you think that's the way to do it. thank God. You know, prior to just throwing in the towel and giving up, I took all that crap off the chart. You know, all right. Do you offer a trade alert service? Yes. I'm looking for guidance when to sell options, when to get out, when to adjust. Dan does a fantastic job of that. We, besides the letters, the text messaging, which he updates intraday, which is as close to real time as you can get, or you can be in the green room. But it's updated on the website in the member area and through Telegram. Everything is documented. All the comments, all the old trades, the ins and outs, the good, the bad, the ugly, all transparent. So yes, IYT, the same as that. Different stocks in here. They're not the same 20 stocks. There are more stocks in IYT, but the same. It cleared these pivot highs. It's bullish. Look, breakdown failure. And it didn't even go sideways to form a downside shakeout. It just cut right through it. It's bullish. Right? It's lower here this morning a little bit. Let's see what the airlines do. They're going to report. Guys, I got to run. Dan's got to do it. You know, you see how things are. Bitcoin, you know, ripping higher. Maybe it's made a high point here. You know, we're keeping an eye on the dollar. We'll just take a peek at euro. Starting to stabilize here. So we'll see how today brings, and stay out of the blender as we figure it all out. The 250 put. No, should be a no-brainer, and big deal if you own it there. All yours, Dan.
All right. Good morning. Yeah, McGraw, we had one of the IYT expire Friday, and yeah, we can go way out on that. So yeah, let's definitely do that today. Yep. Greg mentioned Bitcoin. I think it's buy the rumor, sell the news. I read in the journal today that tomorrow they're supposed to start trading the futures Bitcoin ETF. And, you know, just so you all know, we can talk about it later, but similar to oil and VXX, it's going to have contango in it. So you're going to have the rolling problem. So if you're genuinely a long-term bull on Bitcoin, just buy the spot. You know, you don't need an ETF where they charge fees and the rolling problem. All right, our opens here, you know, a couple things pulling in, but I don't see any problems on our hands. AMD, we have a bull call debit spread. I have tightened the stop on that on Friday. A couple of shorts here I'm watching. Path sell setup, gapping under the entry, so that's 5-minute low. Same with GoPro. Let me actually type those out right now. Couple gappers here. India Oscar, that's a big breakout. Now, see, I would love it if it were, you know, let's say gap into 160. But, you know, way up here, it's too big. Billy, look at Billy, beautiful. I posted this, beautiful bottoming pattern, little bull flag right here, and now it's gapping up and not too much. I got a retest here on the wheel. Look at this, folks, a double bottom, a new low plus with a bullish daily. This looks fantastic as a gapper. So I posted a 30-minute high, but we'll see if we can be more aggressive on it. Jacopo, VEON. It's gapping down. I do like the weekly and monthly a lot. Well, see, I just see more data. If this were a more fluid move down, then this would be a core trade. So it's not a core, But if it can get over Thursday's high, I like it as a swing. So I will type that in there. Thomas asking about F cell. It's on my list, Thomas. It had a big move. It's gapping up. I still like the weekly, but it might take a few days for that to set up. But it's on my list too. He's asking about gapping up. I like my it's stronger than Billy, but you know, you got resistance over here. I like the reward to risk of that Billy. Facebook, John Sanchez. Yeah, we actually have this as a put spread over Thursday's high. It's the best looking. Well, Tesla's up again, but yeah, that's a bullish gap over the red bar. Sure. I said on the cover of the journal today, there was an article that said a bunch of Facebook employees are not believing in their AI, artificial intelligence. All right, this ACB, let's give it a 10-minute stop. ACB, we just got suckered into that morning strength. I will never do that again. I say never, but you know, so many times they, like I said, they look good. And then they just disappoint over and over and over again. All right, AMD. AMD, I already had moved it. WLTW alarm. A CMRE alarm going off. Okay, this was a 1, 2, 3 short. This one's good to go now. I don't need to wait 5 minutes on this. Just because it looks great. You know, just as if the market were still open on Friday. You know, it's just continuation of this downtrend. Actually, you know what? Let's make it under the low right now. Make it under 1317. Just so we don't get caught in, you know, the 931 little whip